And in the meantime, I'm going to ask you to confirm that you hear me, first of all, and see visual. So once again, good morning. Welcome, everyone, to our trading session. I'm going to show you the PowerPoint first, and then we'll take a look at the markets together. So just bear with me when we go through the steps, our strategies, and also the terms and conditions. All right, so I'm glad that you can, I got confirmation that you can hear me. That's great. So once again, welcome to our live trading room at Admiral Markets. Please be aware of the following risk disclaimer. The possibility of a high risk in the Forex market is high, and global financial markets in general as well. For that reason, please be aware of the risks involved and read the entire disclaimer. Basically, trading for exchange is not suitable for all investors, so please be aware of that and seek the advice of an independent financial advisor for more information on that. All right. So thanks for your attention on that. Today is Wednesday, the 10th of July, and it's a day of FOMC meeting minutes later on New York time. But we'll take a look at the calendar a bit later on. We're taking a look at my own capital, and we'll be looking at especially breakout strategies, primarily on the 1 and 4 hour charts. We'll be taking a look at intraday trades as well. For example, the London Open trade, all right, and maybe even a position trade. So what is a breakout? Basically, it's these black consolidation boxes, all right, and you can see that once you have a breakout, that is the optimal time to trade a breakout. All right. So if you want to follow Admiral Markets in social media, take a look at the Twitter and Facebook site. And otherwise, I'm going to click on the Forex calendar and we'll take a quick look what expects us today. There it is. We have a light agenda up to basically the USD FOMC meeting minutes. We have crude oil inventories, but otherwise that's all light news, to be honest. We have some European news announcements, but they're all medium and low impact. Later on today we have FOMC, and for the Americans still today we have actually Australian unemployment data, but that's for Europe and Asia Pacific. Australia, that's tomorrow. All right, that's on the Aussie. That could be an interesting data release for the Aussie, by the way. Employment change and unemployment rate. Alrighty, let's move on to take a look at the pound first to see if we have a London Open trade, and we don't. I already checked it. The moving average is kind of flat, pointed downwards, but in fact we had a pretty big rise in the Asian part of the trading session. The second part of the Asia session, basically quite unusual 60 pip rise on the pound dollar. That definitely doesn't happen often. Quite an unusual feat for a currency to move that much at that late or early, depending on how you look at it, but that early in the trading day, basically. All right. So we were not able to break this high that we set at let's see, 6 o'clock British time, and we didn't break that high for. This is a 5-minute chart, pound dollar, just to make sure that you're on with me, and it's 246. Definitely something like looking like 2 hours. Wait, let me zoom out here to the 50-minute chart. This is 2, 4. This is the 6th candle that couldn't break the high, which means basically we're 1.5 hours already below this low, and that looks like a resistance spot to me. You know, it was definitely a big move up, but if you look at the 1 hour chart, you can definitely see a pretty good impulse here. We broke even the daily bottom at 148.30, although just barely, and quickly we resumed upwards and went back actually into that zone above 148.30. But still, if you look at the impulse, although it's maybe not as big as the euro, right? The fall was still decent, and the likelihood of a retracement and then fall is always there. Now, if you look at the 1 hour price action signal, that's a pretty decent wick as well. So this is something that I'm interested in to trade. Personally, I already on a different account, because I use different accounts. You know, I only use this account for trading with you in this session, right? I already sold the 50 fib, to be honest. So that seemed like a good, and I had an entry order at the 618 as well. That was just missed. So it looks like we're finding resistance. I like that. So in our case, I'm going to take a look and see if I can join maybe a short, if it's prudent. Let's see. I want to know where the Asian session low is and where the high is, basically. Let me just quickly check that. Well, actually, the high is here, to be honest, because this is still 7:15 European time. Okay, so that's a pretty wide box, to be honest, for the Asian session. That's quite, as I said, a very large move in the normally quite quiet time. So that gives a lot of space for this pound dollar to bounce about before really deciding to make any move in one direction. I'm going to take a look at how this hour closes and see how this hour candle finishes, for example. One thing I want to add is a trend line here to see if we break that. We do have divergence on the 1 hour chart, so maybe a break of this trend line would be preferable. Let's see, anything else? We'll check the 1 hour chart again. Well, basically, I'm going to monitor these tops and bottoms on a small time frame, because we're going to get some ups and downs here, and I'll be looking for either a break of the top still, maybe, and then short it, because it could happen that we push up like this, for example, and then find resistance when we break this top by 8 pips, for example. As we know, the 8 pip rule on the pound dollar. That could be one way. The other way could be if we break this bottom here, move down, then probably bounce like that. Let's see, maybe find resistance in here, or really wait for the break of this trend line. Problem is that what I typically more like is these tight consolidation zones in the pound dollar, because then it's easier to already distinguish what the true move of the day would be. It's a bit tricky if you have such a wide zone, because then it could do a lot of up and down here and then still decide. So that makes it a bit trickier. All right, so let's keep an eye on this. In any case, as you noticed, in general, I am looking for a short on the pound dollar just because we're in a downtrend, and recently we made a downfall, and this is still just a correction unless something wacky happens and there's a huge impulse flying up here from this trend line, and we don't break this trend line, then I might change then I won't be looking for a short, of course. I will be looking for price action confirmation, but that's basically what I'll be trying to hunt for if it sets up nicely today. All right, so that's the pound dollar in a nutshell. Alrighty. Just a quick message for everyone. I want to check actually if Graham is here. Graham, are you here? I have a quick message for you. Yes, you are. Good. The recording on the fib, or the webinar on the fibs, unfortunately was not recorded. So that's definitely a pity. I don't know why it wasn't recorded, to be honest. But yeah, that unfortunately happened. I'm checking. There were other recordings on the how to trade the divergence and trading breakouts, and also a trading strategy in detail that unfortunately have not been recorded. So those 4 trade divergences, breakouts, and fibs, and the trading strategy in detail are not available. So yeah, that's a pity, because especially breakouts, I think, and divergence and fibs are really methods I use a lot, so that's quite a pity. But maybe one day we can do a re-recording of them, or do one more webinar on them or something like that. I don't know. We'll have to. If there's a big demand for that, then we can always do that, I guess. I think I would have to check with Admiral Markets, of course, but okay. So sorry about that. Yeah, of course, Rich. You can definitely ask questions. Someone says that the videos are gone. Okay, just give me 1 second, folks. We have anyhow still a few minutes before that hourly candle finishes. I'll just take a look at the educational website, okay? Webinars, so go to Education, Webinars, Video Archive. And I see the videos. So they should be there, Alexandra, okay? Good morning, Bogdan. Good to see you. Welcome. We're looking at the pound dollar. No problem, literally. We're looking at the pound dollar, and I'm trying to figure out how to tackle and get a good short, basically. That's what is my mission at the moment, okay? We're going to quickly take a look at the euro. This is a bit a different view of the currency than maybe you're used to. I think it's a pretty cool stuff that you can see here. I like it a lot. It's a different view. Kind of takes away price action, which of course is, a key element of my trading. But then again, what I like about it is that it kind of intuitively shows you the trend in a way. All right, that's why I like it. So, and you can see here, for example, the 4-hour chart, when the bars, these are Hikinachi bars, when the bars are dark red, definitely downtrend, light red is retracement, and we have a continuation. Same for the upside. So it's pretty cool. You can use it definitely as a very nice trend decider like this, right? What is the trend? So yesterday I got a very nice short here from 128.56 all the way down to, I got out close to when I monitored on the 5-minute chart basically. What I did was I monitored every time the candle made a new 5-minute low, I kept in, and as soon as we didn't make a low for 30 minutes, I took it out here. All right, still continued a bit, but as you see, not much anyhow. And we just oscillated it basically. The impulse was over. And you can really do that with a 5-minute chart, and you can trail stop it that way. You'll catch the most impulsive part. If you look on this 5-minute chart, you can see here, every 5 minutes almost, the low got cut, except here, and we still made a dip. So maybe should have had a bit more patience, but I took it off here. So I got that movement here. That was a good trade. So we got that fall. That's why, I also had a book done. I had, the expectation that it could make a bigger retrace, but that's why it's never, a bad thing to underestimate the power of the trend. And if it does break a trend line like that, then it's still worth trying, despite maybe a bullish bias, because the market apparently kind of disagrees with us in that case. Because I had the same expectation, to be honest. So that happens, I guess. I still think it's I still personally think it's the same setup as yesterday. The euro dollar too. It's here too. We could get a bigger retrace, but the thing is that potential basically for a bigger bounce up, it has been everywhere, and it just keeps falling. So, it's good to focus on the downside. So here too, I'm still focused on the downside. All right, unless we really see something of a changer, some upside, and then a big upside, and then some correction like this, then I would become bullish. Only then. You see what I mean? It doesn't make sense to speculate on upside now, counter trend, when when we don't have any clues except the fact that we're bouncing off, we're hitting resistance levels. But that doesn't mean that the currency will not continue downwards. It's just support levels, and the currency could respect them but then still fall, respect them and fall, and keep doing that for another 1,000 pips, to be honest. I understand, Bogdan. It's very tempting to look at that and try to catch a big retracement and be the first in for the upside, but it could be highly dangerous. That's why if you were going long yesterday, you probably got a loss, and probably many times before that. So if you were to focus on the downside until now, which you probably did until maybe recently, and you started to doubt it. But still, you see my point, I think. And even if this one would fly up like this, you still have one loss compared to many winners in a way, right? So where the indicator, it's a proprietary indicator, but I'm not the owner of it. So that's the problem. But we can definitely look at it on my chart. All right. Sorry about that, but I could hide it from you, but I think that wouldn't make sense either, just because I think it is valuable for you to see it. All right, but it's not something that is mine. All right. Let's see. So that's pretty cool view. Day chart is down as well. 1 hour chart is in light red, which is a retracement. All right. Yeah, there is divergence. There is the possibility, if you look at the 4 hour chart, there is a possibility that we just completed maybe a 5-wave down here. That is possible. And you can see it pretty easily here on this chart. 1, 2, 3, 4, 5. It's possible. It's possible. Then again, this could be extended, and this could be 1, 2, and then we have a 1, 2, 3, 4, 5 for 3, and then we still have 4, 5. So it's a little wave in a way is it's tricky because we can get extensions and just keep falling basically. So that divergence, it's 1 hour divergence at the moment, in my opinion. And the 1 hour divergence, look at here, for example. We had 1 hour divergences here. Both cases, we just had a small retrace. See that? Small retrace. This one a bit bigger, but still we had falls after that, even though we had divergence. So. No, not always, to be honest. I only use it with this one, actually. Otherwise, I never use it. To be honest, only the normal candlesticks. But in this case, it's a neat combination. Alrighty. So yeah, the same story. I would personally put a fib on this downside, and if we retrace to 50 or 382, and I see something of an interesting price action signal, some major, some good wick on the 1 hour chart, maybe. This is a bit early. I don't know. This is only the 236, and I would rather see a bit bigger retracement. So we have a doji here. It's not that interesting either, that signal. All right, so let's see. It could break immediately, but then I'll skip it. Would rather want to see a bit bigger retrace, and then see some rejection here. All right. If you really like the trade, you could even take the fib itself, but then the stop loss would have to be all the way here, which is relatively quite big. So one way of avoiding a big stop loss like that is waiting for some rejection, which definitely reduces that stop loss. All right, there's a a video on stop losses as well, by the way. All right, that could explain stop losses in more depth, but you know, if you want to avoid the stop loss all the way here, especially with 1 hour divergence, that is definitely understandable. So if waiting for some rejection and then decreasing that stop loss makes sense. All right, let's take a look at the pound. Yeah, definitely 2 bearish candles in a row at a resistance level. Those fibs are definitely resistance levels. The only thing I'm a bit skeptical still at the moment to use this as a stop loss place. You know, this same story as for the euro basically is that this stop loss is the safest, because if that level would be taken out with an up move, I don't want to be in the trade, because the psychology has changed, the environment has changed, and we have moved away from a downtrend, and you know, maybe not necessarily an uptrend yet, but definitely in neutral territory, definitely in something, you know, in an environment we want to be more careful, and we'll have to see if it's just a bigger retracement, bigger pullback, or if it's a bigger reversal. You know? So that 149, what is it, for 149.90-ish here is definitely a key level. So that's the safest stop loss, to be honest. That's the stop loss I have for this 50 fib on my other account. Okay. Here too, it would be nice to reduce the stop loss to decrease the risk. The only thing is that this high it's possible, but still seems a bit risky to me. I know that the pound likes to break tops by 8 pips, for example, as I said earlier, and then still move down. So maybe a stop loss which is a bit wider away from here would make sense. Then again, you know, looking at this impulse, it could also be better, for example, to wait for a break and hook back. That could be the safest trade. Because otherwise this could push up and then all of a sudden do this, and you know, it is possible. You never know. Look at this was also a pretty aggressive move up, right? This was the safest short that happened actually with the news event. So, you know, it depends if you trade news events or not. The euro short happened later in New York. That was the better one because it was, you know, I like it more if they break during non-news events. So I didn't take this pound, to be honest, but I did take the euro, and that was a great break. That was a great break because the IAO was quite low with a nice retracement. This one, the next one becomes a bit iffier, but still, if we break that trend line, that would be a high likelihood of a continuation. So that's probably the safest. Safer than the fibs. So let's keep an eye on that. If it does break the top by 8 pips, I will zoom into 5 and 1 minute charts and see if there's some reaction to it, and I might attempt it. I might make an attempt. Sorry, I'm stumbling over my own words this morning. And I would be, you know, quick to move it to +1 because it either is the top and moves fast down, or it's just a retracement that still moves up. And there's no sense to live with the risk. Might as well move it to +1 immediately almost, because as soon as it gets rejected. Because it's either the D-top or it's just a retrace of 15 pips and continuation. All right, so let's take a look at others. I think the Aussie could be interesting as well because it made a pretty big retracement, and it's still under the last week's high. So if it breaks last week's high, then I'm becoming a bit more cautious. All right, but otherwise, this retracement out to the upside is still within the last week's candle, and that's still a retracement in my opinion. We can take a look at it right now. If you have anything else, let me know. We'll take a look at that currency. Otherwise, we'll just scan everything for swing trades today, okay, on other currencies. And if we'll do a webinar on fibs, there's a question here from Bogdan. I hope so. We don't have the recording, as you probably know. Maybe you missed that at the beginning. But unfortunately, that webinar wasn't recorded. That's a real pity because I think fibs in my opinion is one of the most important videos actually. So that's a shame. Maybe it could be a good idea to redo it indeed. I wouldn't mind. I'm only scared that no one would join me because it's the second time we talk about it. And that wouldn't be too, how do you say, too smart or too optimal, right? Because Admiral Markets, of course, wants a good size attendance to make it worthwhile, of course. So if you have interest in fibs, let me know. Then it makes more sense for me to go to Admiral Markets and say, listen, there's still a bunch of people who want to watch that fib video. Let's redo that. All right. So if you do, let me know. Otherwise, the only thing we have is the PowerPoint. All right. Alrighty, let's move on quickly to take a look at other currencies like the Aussie. I think the Aussie is a pretty cool currency, and what I'm looking for on the 4-hour strategy, I have an AO strategy on the 4-hour chart. Basically, it says that if the AO is back to the 0 line, then I'm waiting for the next 4-hour fractal break, which is at the moment 90.80. I'll make it orange. But soon enough, we'll have a fractal break actually at 91.25 if this 4-hour candle prints right in here. So then that would be the entry. And the stop loss would be the opposite fractal. And the target would be 2 to 1. That's something I'm interested in. There's, the Aussie is a bit complicated in the sense that we have this pretty cool trend channel. There are a lot of observations on the Aussie. We have this pretty cool trend channel. Oh, sorry. Trend channel going on like this. So we could maybe bounce here at the apex of the weekly high and the trend line if we get there. We had a falling wedge which was broken, right? Like this. That has been broken. We had double bottom here, plus that falling wedge. And the spaces, the move downward getting less and less further away. The impulses were dying out. You can see impulses were a lot bigger at the beginning, and every time we move in time forward, the impulses are becoming less long, right? Until we even had double bottom and then broke out of that falling wedge to the upside. Now, basically, what you have here is, in my opinion, still a correction. All right, but could it be a correction that might break out of that trend channel? Sure, that is possible. In that case, I'll change my view, become neutral, or maybe even bullish. If price moves slowly down here like this and bounces somewhere here, I would probably become bullish. Until we stay under this blue line, the upper blue line of the trend channel and the light blue line of the weekly high, which is at 92.50, I'm definitely still bearish. All right, and looking for ways to catch a bearish trade. One of those ways is the 4-hour fractal, and I'll explain that in a second, Rich. And the other way is to put a trend line like this. So either of the two, a break of this trend line and then a break of that 4-hour support, are both two trades that I'm interested in to the downside. If it doesn't happen, then nothing lost because it'll just keep moving up and then break this trend line. The whole idea is invalidated once we break this level or the trend line. Then the downside is invalidated, and I would not be looking for a break of this trend line nor a break of the fractal. All right. If we stay within this zone and then still move down from here, I'm looking for shorts. And then this was just a retracement, probably for more downside, maybe to 88, 89 at least. So interesting spot. Definitely reaching a major resistance. And if you move down to a day chart, it's a bit messy maybe, but let's see the major high is here at 93.50. That's the daily top, but it's not a level that, it's still a resistance level, but if we break that, that high, I would definitely be neutral already, for sure. This is neutral zone, this is bearish zone, and above that daily high would be bullish zone. So that's how I spaced out the currency between 92.50, under 92.50, and then between 92.50 and 93.50 basically, and above 93.50. All right. If you look at the week chart, you can see, and now I know it's a bit messy because I have a lot of trend lines, but here you can see last week's high. So anytime we retrace the high, usually speaking, it was a resistance area, except here we broke the high with this candle, but then still came down. So this, as booked on, maybe has, is thinking on the euro and pound. Basically, could be maybe the moment that, we make a bigger retracement. That always could happen. So let's see. That's why the breakout trade is the best, and not trying to catch it maybe here necessarily, because of that danger of a bigger correction. And if we wait for the breakout, then we have more confirmation of the actual fact that this could be a retracement to the upside and not a bigger reversal. Otherwise, the last comment, we do have pretty strong, even stronger divergence than the others, than the pound and euro on the 4-hour chart. So that is a bit concerning. That could definitely be the reason why we're retracing, and could definitely be the reason why we break this trend line. But let's see first if that happens. The CAD is the same actually, the dollar CAD. It's an exact copy of the Aussie, but then the other way around. It too has divergence between the tops. It too has a pretty cool trend line connecting this correction here. I'll make that thick red. All right. It too is kind of like in a channel, like the Aussie, going to the upside. Although the channel is moving very slowly to the upside. Do you see that? So here too, a break of that red trend line would signal a continuation of this uptrend channel, and that would be a good trade, I think. All right. For those of you who remember the trend line and trend channel webinar, hopefully some of you were there. Then this is a good, a perfect example. Here too, the AO strategy could be in effect, basically, although it's iffy-ish. The reason why it's iffy is that the AO reading is pretty weak, but it's a level to reckon with, though. All right, because it's a 4-hour fractal, it is a resistance level that would be nice to crack. So there's a small move up to that resistance level, maybe then down again, and the next one we'll see a bigger break, for example. Something like that could happen. So it's quite similar to the Aussie. All the things I mentioned in the Aussie are almost all applicable to the dollar CAD in a way. All right, what is the 4-hour awesome strategy? Well, basically, it is explained in a video webinar with Admiral Markets, of course, that is explaining intra-week strategies. It's called intra-week and volume strategies, and this 4-hour AO strategy is is explained in there. And basically what it boils down to, it's very simple, and that's the beauty of it. It's a 4-hour chart, so the stop losses are a bit bigger. But the beauty of it is that we're looking for big AO readings. So this is a classical example here on the CAD earlier. Big AO readings here. And then the first move down to the zero line, which is here. And then the first break of the closest fractal, which is here. Stop loss is below. And the target is 2 to 1. All right? And yeah, that's the target, 2 to 1. There, you could go for 1 to 1, but it has a higher percentage. 1 to 1 is usually around 75 to 80% correct. But if you go for 2 to 1, it's less correct. It's maybe, what was it, 65-ish. But it, so it's less correct. But because you have a bigger reward that we're aiming for, the return is a lot better. All right, so that's why. That's a quick explanation. That's about it, actually. It's quite simple. But a strong AO reading is required, and that is very questionable with this dollar CAD. So it would be probably better to wait for a classical 1-hour break of this trend line. I like that trend line. I think it's very nice trend line. And I'm surprised it didn't break yesterday, but what can you do? I think it's a nice correction. And looks good for me too. It's a classical setup. It's really classical. It's nice trend channel, correction, and a break would be lovely. Yeah, it does. It's definitely moved up a lot. Big uptrend. So even if it breaks this trend channel, to be honest, then I would be still bullish above 104.70, which is the key 4-hour support level. Once we break 104.70, if the dollar CAD would move down under that level, then I'm getting cautious because that's a daily support level as well. If it breaks 104.70, definitely in bullish, I mean neutral territory, and probably wouldn't be bearish until we break 104.20, which is the top here on the left, where I have a green circle, red circle, and also a bottom here. So here too, bullish above the first orange line, neutral in between those orange lines, and slowly but surely bearish under 104.20. But really only wanted to trade the bullish bias when we break out of the 1-hour correction or 4-hour correction and break above that red trend line and then move up. That's about it on the dollar CAD. I don't want to bore you too long. So let's take a look at something else. Let's see. Let's take a quick look at all the 4-hour charts. Wait. Let me zoom quickly. Go back to the euro. The euro's moving up. Okay. That was a bit expected because I said right the 236 is a very shallow retracement, and usually the market does go to higher levels, right? So that was in the cards. And it's something that I usually don't, I never trade. But if you expected a higher retracement and you're a scalper, I could imagine that you might even attempt to buy. But that's something I never really look for, to be honest, in my trading. I'm more focused on with the trend on 1-hour, 4-hour charts. But if we get a good 50-minute rejection or 1-hour rejection, I would definitely be interested in looking at it. So let's keep an eye on this. If anyone sees anything interesting, if you see a good 50-minute rejection because maybe I'm looking at our currency and I miss it, just let me know, okay? And we'll take a look at it together. Same holds true for the pound, basically, especially if we break this top or if we break the trend line, one of the two. Because now at the moment we're kind of in no man's land, so we're kind of in no man's land. Either we break the top, move down quickly, or it's upside, or we break that trend line. So let's keep an eye on those. Let's move on to some other charts. Maybe someone asked for the euro pound. Let me see who that was. Miroslav. Absolutely, we'll take a look at that. The euro pound is absolutely puzzling me, and I think I am officially going to take it off my list of trading it. I really got very annoyed yesterday because I took the euro pound buy yesterday when it made, in my opinion, and I thought it was a good trade, to be honest. This was a nice break, and I thought this was a hook back. Although eventually it started to move down that fast that I had doubts if this was going to bounce in time because I had my stop loss here, so that was a loss for me. Luckily, I won on the euro dollar. I think it was 3 times my risk, so I compensated this loss nicely. But it was a very annoying loss because I actually had a lot of confidence in this trade, and I totally read the market wrong, or not wrong, but totally saw it differently because I don't know. This looked like a nice break to me. Very nice break, and we already, let me show you on the 4-hour chart, we were nicely above this range level. We broke above it. We have a daily close above it. We stay 1 day above it, the whole range. You know, these two orange lines, these are major tops. They've been, the currency has been under there for 3.5 months. And I thought once we have a close above it, the whole day candle above it on Monday, and we continue to break, I thought this was a great retrace for that. I would have said it's a 99.9% chance of bouncing there. I thought the whole world would be stepping in to buy the euro versus the pound. Well, I got definitely misconceived there, so those things happen to everyone. But yeah, so it's a bit funky because if you look at the day chart, well, let me start with the week chart quickly. I don't want to bore people who don't like this chart, but if you look at this, we had an impulse, correction, and I am thinking that this could be the beginning of the next impulse to at least parity or 106 target for the 5th wave. But, if you look at the most recent weekly chart, we have a move up and we have a nice maybe bull flag, or is it a trend? It could be both. It will be a bull flag once we basically break above this top black line, which is the top of the trend channel, or if we break above the high here, right? So then it will be a bull flag. At the moment, we should assume it's still the potential of a downtrend on the weekly chart, and in that case, we're actually right at the top, and we could, if we break these yellow, orange support lines, we could fall all the way back to this and then still move up. Who knows? All right, so there's the bearish trade here, and there's a very big bullish trade maybe here a bit, but especially above the support there. All right, that's the space on the weekly chart. If we then move down to the daily, we focus on the most recent up move, which is here. To me, the chance seems high that this is a 1, 2, 3, 4, 5. So, and the 5 could be extended. So, in that regard, I had a bullish bias as well from a longer perspective, although we were very close to the trend line. But I expected here a bounce to at least the trend line, and then maybe some rejection down, and then maybe up again, something like that. In any case, most recently we were, of course, bouncing between these orange lines here, and up, down, up, down, a huge daily rejection wick right in here. So that's tricky. To me, this is kind of it is a price action signal, but it's not at a place I like it. If it would be touching this trend line, it would be different. If it would have happened, maybe even at, yeah, it's tricky. It's, you know, the thing is that it still broke above it. It could be a false break, and we move down like this, and it still finds support somewhere in here, or here, or here, or not at all. Who knows? To me, it's not a, even despite big wick, it's not a place I like it at the moment. But it's also probably because I'm just annoyed from the euro pound at the moment. So that could be definitely a factor. Looking at this, you would say that a downside is logical, but it could also be a small rejection for continuation. Considering the other factors that I've mentioned, that is possible as well. So I think it's too iffy to trade either way at the moment. But what do you think? I'm a bit in doubt in general on this euro pound, and I haven't been in sync with it really, especially in this range. I remember taking a loss in this trading room as well, besides my trade yesterday that I took. So, for example, I have not been in sync with the euro pound, that's for sure. To me, from an analysis point of view, it's kind of stuck halfway something and not that interesting. If it were to move up to this trend line and get some rejection maybe, or if it would break out of that, that would be even better. Or if it would close, if it really would start to move maybe under this support level, there's a 4-hour candle with a wick at the bottom. If it were to break underneath that and maybe start to hook back, there could be some small fall here, for example. Maybe that one, but otherwise I'm definitely in that waiting mode. Let's take a look at the others. New Zealand is already in an uptrend, basically, I would say. It could be this trend line that is interesting, just like the Aussie. It's pretty steep. Not sure if I'm interested in that break because it's already showing signs of a major reversal here. Let me add a indicator here quickly. Oh, I don't have it here. All right, no problem. It's kind of like a Bollinger Band I wanted to take a look at, but couldn't find it. So New Zealand is a bit iffy because I think it's already breaking above last week's high. Yeah, you see? It's breaking above last week's high. And therefore I'm cautious now, neutral, and have exchanged the bearish bias into just being careful now, and maybe even becoming bullish if it gives a bigger hook back. The Aussie we already talked about. Let's take a look at the Euro Yen. Oof. The Euro Yen is really in a mess to me. I mean, to me, it's in this uptrend channel. I'll make this black too. This black uptrend channel. It's a huge channel. It's a day chart, and the upsides were short, the downsides pretty long, and it did move a lot of pips as well, but just slower and took more time. If you could look at the week chart, you can see that uptrend channel came after, of course, a tremendous impulse, right, that we had, where it flew up, I think, 3,000 pips. Ever since, we've been moving very slowly. So those downsides were good to trade, but on a lower time frame, not so much in the day chart. Otherwise, after that, we've had a bounce, break of these red trend lines, but haven't broken this major resistance at 131.30. So it's really like in a wedge still, in my opinion. And Obviously, the break to the upside would be with the trend. That would be the best. But that's, that's something we're looking at a day chart. That could happen. That could be 2 weeks from now. If we look at the 4-hour chart, we've had some impulse up, correction, impulse, correction. Yeah, nothing really interesting to me, to be honest. I don't see it that clearly as the others. It's just I really want to break out of this major resistance at 130, or maybe below this 124, 125. Maybe you can see a break of this trend line here. Then again, we broke out of these red trend lines and are now in between those red trend lines. There could be some channel here going on, maybe. It's from a classical technical perspective, it's really not that interesting to trade unless you like complex formations in the currency market. Then this is the one I would avoid. Unless you have a specific way of trading the EJ using pivots that I don't use, then I would avoid this one. Let's move on. Pound yen. This one is a bit different. It too could be in a huge channel to the upside here like that. So we're basically right at the bottom of that channel. Something like this. And if you zoom into the last piece, this downside has been pretty big. It's a bit different than the EJ, but kind of boils down to the same. Basically, we also had a huge impulse here, and we broke out of this correction. So if we break out of that correction, it could be also good for upside, just like here. But we are very close to the bottom trend line. Yeah, something like that. So we're definitely making a lot of downside momentum here with a lot of spikes and a lot of consolidations. Look at this consolidation zone. Look at this. Look at this. And then some funny spikes here in between. I think these currencies are really very funky, and I haven't traded them, hardly traded them for a while because of that. So here again, only interested personally if it were to break. It really has to break above this correction. Maybe to hear something like that. Maybe I'll draw the trend line a bit differently, something like that. Maybe both can be on the chart like this. And then to this resistance, and then further on. All right. Otherwise, let's see. Otherwise, this support level is key. But the whole structure is not that appealing. Dollar yen, a bit funny as well. We hit the 786 here. I'll show you. So it's like a V formation, up, down. I don't see anything really interesting to trade at the moment. It's the 4-hour AO is retracing back to the zero line. I had a great 1-hour trend line here on the dollar yen. I kept my eye on this trend line, but we had a break to the downside, instead of a break to the upside. And I was especially interested in the break to the upside because that's with the trend, as you can see, looking at this trend line. So break to the upside would have been cool. We got a, fortunately, break to the downside, which is counter trend, and I didn't take that trade. But if it were to make an upside here, and then again respect it, make down here, and then break it, still interested at the moment. Unless we break these support levels, then the outlook on the currency changes. Because in that case, then if we break these support levels, we could be making a bigger retrace. Same was valid for the dollar Swissy. Let's see. Dollar Swissy went to the 886. So here too, is this the reversal spot for more downside? Or are we going to push one more time up? So they're all at tricky spots. They've pushed up a lot. They've pushed through all these fibs. Dollar yen, dollar Swiss, the dollar index in general has been pushing. Will we see the retracement? That's basically also on the Swiss. The Euro CAD, I think, by the way, would be pretty interesting if it hooks back here. All right, the AO is retracing to the zero line. So if it does make a up move here and gets rejected, and this is back to the zero line here, the oscillator, I think that would be a good short. So I'm definitely keeping an eye on the Euro CAD. The Euro CAD has been making nice downside already for a while. And for those of you who know about my long-term trading strategy, I told you that I went long somewhere in here. It's a long-term strategy, right? So it took quite a long time to develop. Had at first a pretty big retracement to the 618 fib, then built some wedge here, broke that out, broke out. Finally hit the 272 target, got a bigger hook back to the broken trend line, bounced off that. And right in here, I said, I'm going to move the trade to under these bottoms. Remember? So that was good timing because indeed, I said I either want to break immediately, it's going to break, or we are going to get a big retrace. And my stop loss, which was somewhere in here, I believe, is not safe. And that proved to be true. I think that would have been taken out just a few hours ago. So a more aggressive trader maybe would have even shorted it here. I don't typically do that, but it was a good time to move it to break even because of the time factor element. It had, if you look at the day chart, it hadn't broken this top in 6 days. That's a sign of weakness, and indeed it fell. So we're definitely in a downtrend. Actually, a break of this trend line was already a great trade yesterday, but I was already in the euro dollar, and I didn't want to take an additional risk, but it was a great fall as well. And if it hooks back, I think it could fall one more time. We don't have any divergence here, so I like that. Definitely on my watch list. I don't think it's going to happen in the next 30 minutes, but for today, that's definitely on my watch list. Pound Swissy is basically ranging. It's just bouncing up and down between these tops and bottoms. So a break of the top is good to the trend line. A break of the bottom would be good to the bottom trend line here, if it finally breaks. Euro odd is breaking to the downside, actually. So we're in slowly but surely in a downtrend, actually. The other crosses, like the euro New Zealand pound, odd pound New Zealand, have been in a downtrend already for a bit longer. I think the euro odd is now joining them. Let's see how far this goes. If it goes a lot and breaks this 138 and then hooks back, and this goes to the zero line, I think that would be a great AO for our strategy. All right. The 1 hour world doesn't have any structure that I like at the moment. It's still, what I'll be looking for is maybe a correction like this, and then the next one could be a good break. All right, something like that. Currently, it's just moved down, and then it's bouncing here. It's very small. Bit iffy. Could be tradable on the 50-minute, maybe. Not the 1 hour though. The 50-minute would only make sense if they really break this bottom, I think, for a short trade in here. But otherwise, looking at the 1 hour chart, a bigger retrace is probably more likely. Euro New Zealand, that's already in a downtrend, just waiting for a pullback. Same for the pound odd, although that has divergence. Same for the pound New Zealand as well. This is the odd New Zealand. Let's take a look. Just missed the zero line here. That's a pity. The odd New Zealand is in a great downtrend, but the only problem is that we're back at the bottom of this trend channel. So we could see again, we have the potential of seeing a bigger retrace. If we break, however, break this bottom, where I have the orange line, and break the trend line here, it could fall more impulsively actually. So either of the two, the break of the support level or a move up again back to resistance could be good trade still on the Aussie New Zealand. All right. Let me clean up the chart just a bit. So that's what I would be looking for on the Aussie New Zealand. Let's take a look at the dollar index. Dollar index, we've been pushing above this top. So let's see, is it a break, hook back continuation, or is it booked on right, and is it just a false break and we'll be right back in the trend line and going down again? Quick look on gold. Basically, gold, as I said, couldn't break this bottom for 5 days. 5 days is key. 1, 2, 3, 4, 5. And if it doesn't break that bottom in 5 days, the likelihood of this being an impulse on its own merit, on its own grounds, is very high. And therefore, the likelihood of a bigger correction is therefore higher. All right. So still the same story basically. 382 fib, 50 fib, I think are D spots for one more fall and one more break at this bottom. 618 is the very max fib of retracement. I'm expecting a move above the 618 fib. Definitely puts me in neutral territory. And above 1422, above this high basically, puts me a bit in bullish territory. All right, so that's the division there. Otherwise, time factor, I'm not expecting a break this week, maybe next week or the week after. So this could take quite a long time. We'll be bouncing up and down here, hit the 50 eventually, maybe next week or the week after, and then move down. Yeah, that's basically what I'm saying indeed. Booked on that. I agree. It's indeed entering a range. I think so. I think there's a high chance. I would say 90% chance if I had to give a percentage for at least this week. It could be very slow. It probably not move much. Well, we do have FOMC, so you never know. That could have an effect. It might unexpectedly move the gold more than I expect. But from my point of view, the fact that we didn't break this bottom 5 days in a row really signals the high likelihood of a bigger correction and a bigger range indeed. And so far, this has been confirmed with 3 non-important days just going a bit upwards. So totally agree. Otherwise, next week or the week after, I'm expecting a fall from the 382 or the 50 max 618 fib down to the target, 1120 I think. And if it breaks the 618 fib, then I'm getting cautious. And if it breaks the 1422, as I said, then I am having bullish bias a bit. So that's the zone. All right. Okay, both done. Make sense? Or any questions on that? Okay. Okay, great. So that's my primary expectation. That would be really, I think, still, I mean, a great trade. Will take some time, but sorry, right in here, but that would be a nice fall. Definitely would be interesting. This is gold though. This is XAU-USD, which is gold. It's the same. It's the abbreviation for gold for the brokers. Yeah, that's no problem. Yeah, cool. Alrighty, let's. I kind of went through all of them, and if I had to give a preference, I think the EuroCAD downside is very interesting. Probably all these pound and euro versus AUD and New Zealand's, definitely going to keep an eye on them. The dollar CAD to the upside, although it's becoming less likely it will happen, unfortunately. Maybe the pounds we'll see when it breaks the bigger range. Euro CAD to the downside. Dollar yen maybe still to the upside, although it's becoming very iffy. AUD dollar still to the downside, in my opinion. New Zealand dollar not looking at it. Euro pound not looking at it. And then we arrive back to our euro dollar and pound dollar, and the circle is complete. And so far, unfortunately, we had a very non-eventful pound dollar and euro dollar, and that can happen, especially beginning of the session. I was a bit afraid of that just because of the size of the zone. As I said, it's massive. It's unconventional to have a 63 pip wide zone of Asian high, Asian low, and that could give a lot of space for the currency to bounce up and down with real no intention, true intention to move anywhere. That's a bit tricky. That's why probably, as I said, a break of the trend line or a speculative short at the break of the top and be very quick in moving it to break even, not to lose on the trade, and try to catch the top are probably the best ways. I'm just repeating myself, I know, but just to summarize. Otherwise, you can see that currently, unfortunately for us, it's really not gone anywhere here. Yeah. Funny enough, we did get a bounce here. When we broke this bottom, we got a bounce. That doesn't surprise me, but I'm always more focused on with the trend trades, and that's down. So that's why I don't like this trade personally. But anyhow, I'm not good and I'm not too keen on trading these small ranges, as you probably know in the meantime. So Tilantala would be probably a lot better in trading this setup. I don't think he trades this up and down either, though. Probably, I think he just chooses one direction and grabs just the surest part of the trade he can catch. Let's see how the euro dollar maybe behaves here with the 382 fib. It's kind of a bit shallow to take. The problem is with taking a rejection fib is here. Rejection price action is that the space is small. It would be a lot easier to take a rejection candle off the 50 or 618 just because the likelihood that these fibs are the turning spot are higher, first of all. And second of all, once you have a rejection candle at the 50 at 618, you're not taking it, you're still taking it at a reasonable price. If you wait for the rejection off the 618 fib, basically it would be almost equal to the 50 fib price level. If you take the rejection off the 50 fib, it's basically equal to the 382 price level. If you take the rejection off the 382 fib, you're taking it pretty low here, with a decent probability that it could still retrace higher. So that's one risk of waiting for confirmation at the 382 and not taking the direct fib at the 382. It's easier to take a rejection candle off the higher fibs because there's more space to the downside. For example, here, more space to the bottom and hopefully break. The problem is with swing trades is that they really occur sporadically. So they don't necessarily set up within our session. The 382 could be maybe worth it directly. Let's see. Stop loss is something like 90 pips. Plus we have divergence. Yeah, it is a very tough choice. I'm sure Bogdan is going to skip this one. It's difficult. Let me take a look at this 50-minute chart. Maybe one way of, instead of waiting for a price action signal, maybe the best way is to wait for an actual break of at least this 50-minute, because we're in an uptrend on the 50-minute world with higher highs, higher lows. Maybe waiting for the break of the 50-minute world, get a break, get a small hook back, take it in here, and then take the next fall. Try to get the next fall. That could be a bit better. Because as I said, any price action signal here leaves us vulnerable to basically a retracement, a small retracement back to the green support line I have there, and we could see another push up to the 50 fib. That's definitely what could happen. So that is the problem. While if we wait for the break of that green horizontal line, I'll draw it again. If we wait for a break of this level, then we have more confirmation of a continuation down, because otherwise any down move here could still find that support for it to move to the 50. It's kind of like a chess game, isn't it? It's like trying to think ahead 2 steps. What could happen? So if we got if we were to get a rejection off the 50, then it could be different, because then we have more space. And in any case, the 50-minute world is not giving a rejection yet. It's just we still need 1 minute to close this candle, and we have a wick at the bottom. If we would have engulfing 50-minute candles, that would be maybe a signal. I think the candle just closed. No, not yet. We need still half a minute. Let's wait for that. In the meantime, I'll answer Bogdan's question. What I think of if the euro-dollar would drop, what would gold do, or what will gold do? Yeah, there is some correlation between the two, but I think that when I look at gold from a technical point of view, I don't expect the break today, this week. So I don't think it might just fall a bit, but I don't expect much fall. But that's my own analysis. Regarding the correlations, usually there is one, but it's not an exact. It's not a 100% match, so there would definitely be some discrepancy there. And today could be one where the dollar strengthens, but gold doesn't weaken that much. So that's not much. That 50-minute candle is really not a rejection in my opinion. It's just a doji. So nothing there. We could take a look at how the 1 hour candle looks like. 1 hour candle actually looks like a strong candle with a pretty bullish close. So that's definitely not the price action signal I'm looking for yet, right? On the euro dollar, you can see, right? This candle is bullish. So I'm not looking. I'm looking for confirmation of a turn. That's not it, of course. That's a mismatch. How's the pound doing? Pound is moving up. Let's take a look at the 1 hour chart. Yeah. I think we're going to break the high, to be honest, right now. It looks like we're pushing. So for the remaining 50 minutes, I'll just take a look at the pound because we looked at all the currencies already. Just maybe take a quick look at the Aussie, what it's doing. Okay, because it's really approaching that 92.50 area, which is the weekly high. So that's interesting for me to see what it does when it approaches that level. Otherwise, we'll just take a look at the last 15 minutes at the pound, okay? And I'm going to monitor if it does break this high, and if it does, if I'm interested in selling it. Okay, so that will be the last part of our session. Would you be interested, because we're thinking about how to structure these webinars, so your feedback would be greatly appreciated. Would you be interested in splitting the sessions in swing and intraday so that you know what the main theme would be? Would that be something that would be of value to you? If you say yes, please. If you think yes, please write Y or yes. If you like the mix of looking at things, then please write no or N. I think the advantage of splitting it is that everyone has a clear idea what we'll be looking at. Plus, it's actually would be easier for me because now I'm looking. I think that the focus is too wide, to be honest, and it's difficult for me to, because I'm looking at so many things, because I want to keep the attention of, or kind of make it interesting for as a broad audience as possible. It does make it tricky for myself to, and I miss certain things that I would normally be maybe looking for. So that's why. But the question is, if you want to make it more focused, the sessions more focused on certain strategies, on certain ways of trading, like swing trading or intraday trading, or do you want to keep it more general like this? So in the meantime that you write an answer, I'll just be back in 1 minute, all right? I need to grab something, and I'll just let you answer that question, okay? Alrighty, folks, I'm back. Pound is pushing. It's getting exciting. We'll take a look at the answers. So I had 2 yeses, three basically, I think. So more focus. Go seek also more focus. That's 4. R&R says less pairs. That depends on the trading style as well. If I'm trading swing trades, then it's important for me to look at a lot of pairs, to be honest, because then because I'm looking for certain setups basically, and the more pairs I catch, the more likely that I catch certain setups. That's why. But if we look at intraday, then probably the most sense would make sense to only look at the euro and pound, of course. Oh wow, it's breaking. Wait, let me zoom in. Sorry, I was reading your answers, but let's take a look. So I'm keeping an eye on this. In the meantime, I will take a look at the 1-minute chart, see how that reacts. In the meantime, I'm getting some comments saying that swing is okay. Patrick saying make the split, it's better. Kosik is saying mainly most of the people trade EU, GU, and yen already. Maybe indeed. So suggesting 5 minutes for each pair for intraday and swing, okay. So keeping more the general focus still, but splitting it in more precise segments, okay? Understand? Poke down is also more in favor of swings, okay. Kana is asking why is it breaking? Well, it doesn't surprise me in a way. As I said, I don't really think that this top is safe yet as a stop loss. And the reason why is because of this was a pretty good up move with a pretty good AO reading, pretty strong. So a break of that top to create divergence and then find some resistance is high. That's why I didn't find it safe yet. And I'm sure there will be scalpers trying to buy it because for them it's a high likelihood of a move up, for example. Personally, I'm not, as I said with the euro, I'm not really geared towards trading those moves, but that's why. But that's why I was definitely skeptical of using that high because it how do you say, it had a definitely a decent probability of breaking the top, which it just did. And it went to 149.17, which is the 8 pip target that I was talking about. So maybe I should have put entry order, but what I think I'll do is just wait for some movement here, and then take the break of the 1-minute fractal with a stop loss above it. That's a bit more sure because then you have confirmation of the respect. I mean, the 8 pip rule is pretty good. It does work most in a pretty decent amount of cases, but it's not a 100% thing. Plus, if I look at this pretty big up move, that makes me a bit more leery as well, that the 8 pip thing would work. But apparently it did. That's good. Anyhow, it doesn't matter. We'll try to catch it if we get some 1 minute break of downside. Now, it's not that I want to trade the 1 minute chart, or I'm always geared on trading the 1 minute chart, as you know, but in this case it's more trigger. It's a trigger chart, not an entry chart. We can see we already fell from 149.17 to 149.06. That's an 11 pip fall from that 8 pip break. Right? If you want to know more about the 8 pip break, then take a look at the GU characteristics webinar. So it's probably going to bounce up and down here. We'll have a 1 minute low, 1 minute high, and then either continue to break to the upside. In that case, I'm not interested, or break to the downside. That would be interesting. If you indeed take yesterday's top as your stop loss, then you can take any trade in here directly for a fib trade to the downside. That's what I have done with my own accounts. Here I'm going to try to catch a smaller stop loss. I don't want to take the trade same trade twice, but I'll try to take it on the smaller this 1 minute time frame. Okay. But that is definitely, if you use the top here, here, where I have the red line here, that would be a safe fib trade with the 618 target. 618 bounce, stop loss here, and the target at 272 and minus 618 targets. It's a fib trade, and as I said, those are a bit more riskier than a breakout trade because then you have the confirmation. Or you can do both. Take the breakout, take the fib and the breakout, so that you add a position when the breakout occurs. You see, the 8 pip rule doesn't necessarily mean it's a total reversal. It could just be a small retracement, and it could continue. That's why I'm always more aggressive with moving to break even. It's difficult to say if I would have done it now already. Not sure. It seems to me a small move down. I think I would wait still. But I'm not in the trade, so it's easy to say now. But so I'll keep an eye still on the next few minutes. Basically, once again, this is a 1 minute chart, but it's just a trigger chart, right? It's basically trying to catch the earliest possible turn off a 618 fib. And if it doesn't turn, then you avoided an entry that doesn't seem to be too good. That's always the risk of fib trades. And that's why breakout trades have least risk. Some people have mentioned, and me too, that there is divergence on the 1 hour chart that makes it a bit trickier. So let's see. It would be cool to catch the turn here, but it doesn't look like it's happening. Nope. Looks pretty impulsive, actually. I mean, I know it's a 1 minute chart, but we're pushing to the upside, unfortunately. We got a 618 respect. It was very minor. This could expand in this correction, but it looks like the bulls are in control at the moment. Which is funny because we broke the big daily bottom at 148.40. I know we only broke by 30 pips, but still, those things are always funny, aren't they? When they break tops and bottoms and then do the opposite, which at the moment they're doing. Price went down, broke the bottom, and is moving up now. But it does happen a lot. Reverse psychology with breaks of bottoms and tops. So unfortunately, that doesn't look like it's going to set up. Not now, within our session. That would have been nice to see it bounce up and down here and then take this break. Would have been a very small stop loss, basically 15 pips. And probably could have gone for 2-to-1, I would say, easily, if not more. But it's not in the cards, not at the moment. The next retracement fib would be the 786. That should be resistance with 886. All right, so that is 149.40 and 149.60. So I'm looking for a rejection there as well. Let me take a look at the euro. Euro is moving up as well. We had 1 hour bullish price action, right? So we're getting a continuation of that, and to the upside, and looking for that rejection 1 hour wick on the euro dollar to show that the bulls have lost control, and hopefully the bears have regained initiative and can push it down one more time. Hopefully. If not, then unfortunately this is a bigger retracement. I've been warning for that for a long time. That's always the risk. Trend, continuation or not. Last thing I want to mention is the Aussie. Someone mentioned the Aussie. It's really getting close to that weekly high. It's really pushing. It's reached 92.30. Oof, that's going to be very interesting. Yet again, a move up. Wow. To be honest, I'm slowly becoming neutral, even though we're, the fact that to be honest, yeah, the fact that we actually broke above this level is already a bit concerning for the bears. That was the ideal moment to break actually here. Make a pretty big retracement, make a hook back and fall. The fact that we actually broke that level, as I said yesterday, these are key levels, is already a bit concerning for bears. But the weekly high is definitely important. So I would be looking for, if we reject here, I will be looking for a fall right in here. It will be very interesting to see if we reject there. If you want to take a chance on the weekly high, it's possible, but it is risky because we are moving up and we could break. But it's a small risk. You probably, if you put it just above the weekly high. So that will wrap it up for today, folks. Thank you so much for being here. Really appreciate it a lot. Hope you enjoyed it. Despite the fact that, in my opinion, I don't see anything really tradable. But hope to have given you some good heads up. Bogdan is asking about fibs. Well, I know that Di Napoli has some good books. I think on fibs, if I remember correctly. I could send you the PowerPoint we have, what we had for the webinar. All right. Do I have your email address booked on? I think I do. Don't know by heart. Thank you, Akana. Your words are very much appreciated. Okay, that's great. I think that's very kind of you. Okay, I got your email address. And I got Richard's too. Alrighty. Patrick, sure. Just give me your email and I'll send it to you too, okay? Sure, okay. I'll send it to you too. Okay, and of course, definitely. So Patrick, I just need your email address, and then I can send it to you, okay? For those of you who want to leave, I understand, because basically I'm just waiting for Patrick to give his email address, and I'll close it down. I want to thank everyone for being here, and hope to see you tomorrow. Thanks for all your kind words, and much appreciated. And hope that this dollar still makes one more plunge. That would be cool for me. But if not, no problem. There it is. Thank you, Patrick. Alrighty. I got all the email addresses. Great stuff. Thank you all, and see you all tomorrow. Cheers, everyone.